Good afternoon. I'm Bruce Tatters, CEO of Red Cloud. Our next presenter this afternoon, we're very fortunate to have Rudi Fronk, Chairman and CEO of Seabridge Gold. Seabridge Gold has had a series of major strategic announcements this week that we're really excited to have Rudi discuss with us here today. Rudi, you have about 15 minutes for your presentation, and then about 5 minutes we'll do Q&A at the end. Please go ahead.
Thanks, Bruce. I'll try to move it faster than 15 minutes. Although with the news we have, I might get bogged down a bit because it's pretty exciting. Yeah, so we had two major announcements this week. One was we've secured 225 million US, or about 285 million Canadian, from Sprott royalties and Ontario teachers that'll be used to advance and move forward substantial start activities at KSM to ensure that the permits we have in place are good for the life of the project, i.e. they won't expire. And then second, we also announced an agreement with BC Hydro. BC Hydro is the one that built the power line going right past KSM that will allow us to bring cheap hydropower into the project for construction activities. Just a reminder that I will be making forward-looking statements. So why Seabridge? We've got a 22-year track record of showing significant outperformance relative to the gold price and other gold equities with respect to our share price. If gold's going higher, which we believe it is, our shares should do what they've done for the past 20 some odd years. In addition to our leverage to gold, I'll also explain to you the leverage we now have to copper. We also own 100% of the world's largest undeveloped gold copper project, KSM, located in British Columbia. It's not only large, but has also successfully gone through the environmental assessment process with permits in hand. And we're now in the process of updating the Pre-Feasibility Study to incorporate the newly acquired East Mitchell deposit that we acquired from Pretium. And then last but not least is our exploration portfolio. We have found more gold through the drill bit than any company on the planet. Over the past 20 some odd years, we have found over 100 million ounces of gold through exploration. And we now have 3 earlier stage projects to continue, hopefully, that success on. When my colleagues and I started this company in 1999, we wanted to minimize political risk. Tends not to happen as much in North America. And as you can see on this map, we have a very tight geographic focus in terms of where we operate. The big thing we tried to achieve, though, from day one was optionality and leverage the gold price. And we do this through the quite simple concept of trying to grow ounces of gold in the ground faster than shares outstanding. I think what we're most proud about as a management team is after 23 years, we only have 79 million shares outstanding today, but our ounce count is well above 100 million ounces in all resource categories. And as you can see on this graph, we've delivered on that concept of ounces per share. In fact, if you look at us today relative to the industry, in terms of gold reserves per common share or gold resources per common share, we provide 5 to 50 times more gold ownership per share than any company in our space. And what this has translated into is what we were hoping for, and that's outperforming the gold price and outperforming other gold equities. Investors buy gold stocks with the expectation if the price of gold is going higher, the price of the share of a gold mining company should outpace the price of gold. It's interesting to note here that most of the major gold companies have actually underperformed the price of gold over the past 23 years. Whereas obviously we have not. Takeaway from this is if the gold price is going higher like we believe it is, owning Seabridge shares is probably a good way to capture an upside just beyond the gold price. And we're not just about gold. Along the way, we also found a lot of copper. At KSM, we have over 50 billion pounds of copper in all resource categories. And if you look at Seabridge today in terms of copper reserves per common share or copper resources per common share, we actually provide more copper leverage than the larger copper mining companies on that metric. And we think that's important because there's no doubt in our mind that copper is going to become a very important metal as we go forward because of all the new green energy initiatives. The amount of copper that's consumed in electric powered vehicles, solar panels, wind turbines, and just the connectivity of electricity to end market users is growing dramatically. And I can tell you firsthand that trying to permit new mines to meet that demand is getting more challenging and challenging. So we foresee not only higher gold prices going forward, but also significantly higher copper prices. So KSM is the project that we've spent most of our dollars on over the past 15 years. We've now invested about $500 million into KSM, defining not only the world's largest undeveloped gold and copper project as measured by reserves and resources, but also one that is capital efficient in terms of financial returns, and also one that has successfully gone through the environmental assessment process with permits in hand, with strong endorsements from the local indigenous populations. We're located in the middle of the Golden Triangle, just south of the Galore Creek mine. That's a Newmont Tech joint venture, just south of Red Chris, that's owned 70% by Newcrest, and just next door to Pretium, that was just purchased by Newcrest for $2.8 billion in cash. Logistically, we also have a lot of advantages. When we bought this project in June of 2000 from Placer Dome, there was very little infrastructure available. Fast forward to today, we now have major highways, Highway 37, just to the east of KSM. Along that highway, the government of Canada and British Columbia has extended the power grid, bringing cheap hydropower to the region. The agreement we signed is with BC Hydro that basically manages the grid along that highway. And just to the south of us, we also have two new port facilities, an old one that's been rehabilitated and is now servicing the Red Chris mine, and a brand new one that's waiting for an anchor tenant. So access to roads, access to cheap power, and access to ports really puts KSM far above a lot of these other large undeveloped projects around the world. In terms of mineral resources, KSM, we always talk about this as a project. The fact is, we own a district. We have 5 deposits at KSM that now yield us over 9.8 billion tons of economic resources that are either confined by open pit shapes or block cave shapes that collectively have over 75 million ounces of gold in the measured and indicated category and over 17 billion pounds of copper, with another 66 million ounces of gold and 33 billion pounds of copper in the inferred category. We finished a pre-feasibility study in 2012 that was used as the basis to apply for our permits. We did receive our permit approvals in 2014, and those permits are now good until July of 2026. We updated the pre-fees in 2016 and then reconfirmed the numbers in 2020. And that study showed a mine that would produce gold and copper for more than 50 years at an all-in cost of production, including the upfront capital, the sustaining capital, the closure costs, and the operating costs net of copper and silver credits of about $670 an ounce. And that was done at $275 copper. If you plug those same numbers in and use today's metal prices, the all-in cost of production is about $160 per ounce. What that mine plan did not yet include, though, are the 2 higher grade copper zones we have found subsequent to that, namely Deep Kerr and Lower Iron Cap. One great thing about KSM is that the optionality that it provides an operator in terms of how you want to mine the deposits. Do you want to focus on copper grades versus gold grades, or gold grades versus copper grades? There's very few projects that I've ever seen in my 40 years in the career that provide that mine sequencing optionality. Where we're moving forward now at KSM is in December of 2020, we purchased a deposit from Pretium called Snowfield. We've now named it East Mitchell because we're convinced that the Snowfield deposit was the sheared off top of Mitchell. We're now in the process of updating our pre-feasibility study to incorporate Snowfield or East Mitchell into the new mine plan. We bought this deposit for $100 million in cash, plus we granted Pretium a 1.5% royalty. On the front end of this, we got about 35 million ounces of gold in all resource categories, meaning we bought ounces in the ground for about $3 per ounce. What we expect Snowfield or East Mitchell to add to the project will be more gold production. There's higher grade gold at East Mitchell than there is at any of our deposits. It's also a very, very low strip ratio. We'll be able to show a project now that actually can mine open pit only material for decades into the future. One of the drawbacks of our previous mine plans, including the 2016 pre-feasibility, is that it required the development of large block caves within the first 10 years of production or so. By bringing East Mitchell in, we can push the block cave mining out way into the future, or not at all, matter of fact, at least in my lifetime, and show a project that's open pit only, And as a result of that, we'll be removing about $3 billion of sustaining capital that doesn't have to be spent, and significantly improving the project's economics in terms of net present values, internal rates of returns, and payback periods. We expect this updated pre-feas to be done sometime in June, and I think this will be another major move forward in KSM in terms of de-risking and making it more attractive. The announcement we had earlier this week dealt with us obtaining funding from Sprout Royalties and Ontario Teachers to the tune of US $225 million that we will be using now to achieve substantial start designation at KSM. And why that is important: if you can achieve substantial start designation at your project, the permits that you have in hand, in our permits that are due to expire in July of 2026, would actually be good for the life of the project. So we think it's money worth spending. We think it's a major de-risking to go forward with. The focus over the next few years will be on roads, camps, fish compensation, and power infrastructure. This is a pretty creative structure in that it's not dilutive at all to our shareholders. We're not issuing shares for this. What we're issuing is a convertible note that converts automatically into a 60% royalty on the silver from KSM at the point of commercial production. When you look at silver at KSM, it represents well below 3% of the project's revenues. So even 60% on the silver content here is a very small giveaway for the project. One way to think of it is to offset the silver royalty means that if gold goes up 40 bucks an ounce, you pay for the silver royalty. And from our perspective, dealing with pounds of copper per share and ounces of gold, we thought it was a pretty creative way to fund this project activities going forward without equity dilution and without it hinging on impeding on our gold and copper. The other announcement we made was with BC Hydro. The power grid is up and running now. We've now secured with BC Hydro with offtake agreements of 245 megawatts of power from that line that was planned to be at the project in time for start of operations, never for construction. With this funding in place now from Sprott and Ontario Teachers, we actually are moving up the timeline to bring the cheap hydro power into the project area so it will be available for construction. That will actually allow us to offset some of the impact we're going to see on inflation with lower construction costs, because we'll be using BC Hydro power that comes to us at about 5 cents per kilowatt hour. We're not a single asset company. We also own 100% of Courageous Lake in the Northwest Territories, a project that has a resource of about 11 million ounces now and proven and probable gold reserves of about 6.5 million ounces. We did a pre-feasibility study in 2012 that looked at a project at the time when the Canadian dollar was essentially at par with the US dollar, which is not good for Canadian assets. And at the time, it showed a fairly marginal project in terms of expected financial performance. If you just change the numbers, though, put in a higher gold price and lower exchange rate, what was once a marginal project looks a lot different. We also did a study a couple of years ago looking at, is there a smaller startup project here before you need to commit the capital to a larger project? And indeed there is. So we're now looking as an organization, what is the best path forward to unlock value to our shareholders? It could be the sale of the asset, perhaps keeping a stream. It could be a joint venture, or it could be us getting back working on this ourselves. So that'll be a decision hopefully we will make sometime during the current year. Where we do want to focus our activities going forward on the 3 earlier stage exploration projects we've acquired since 2016. First one is Iskut, located pretty close to KSM. In fact, we see a lot of similarities at Iskut to what we saw at KSM when we acquired that project in the year 2000 from Placer Dome. It is a large system, gold and copper prevalent there. We actually have a small resource that came along with it. What we're looking for at Iskut is big gold copper porphyries. We think we tagged the top of one a few years ago. We are following it up with drill programs this year, not only at that target, but also looking underneath the Bronson Slope deposit, which brought us the initial resources when we acquired it. Second acquisition we did was Snowstorm in Nevada, a large land package that sits on the intersection of the Getchell Trend, the Northern Nevada Rift Trend, and the Carlin Trend. Large land package, our focus here is looking for Twin Creeks, Turquoise Ridge style mineralization. Those are two big mines that are operated by Barrick and Newmont in their joint venture. And then the last acquisition we did is the Three Aces project located in the Yukon. We bought this project at the height of COVID, paying 300,000 shares and granting a 0.5% royalty. Large land package, but with some tremendous high-grade intersections right near surface by previous operators. We're now planning an aggressive drill program for 2022. We're in front of the regulators and the First Nations now to get approval. So kind of wrapping it all up before Q&A, we are dual listed, the New York Stock Exchange and the Toronto Stock Exchange. And one last thing I'll leave you with is insiders of Seabridge own over 30% of the stock. Show me a company out there where you have such strong insider ownership from people that have been with this company since the beginning. So Bruce, I think I said my 15 minutes worth. So
you did a really good job. You did a really good job. You got a lot of good projects there that you handled really quickly. Rudi, we won't have time for all of them, but I'm going to start with the first question here. The comment from the message is, thanks for the financial discipline. Could you share what the most likely transformation structure from exploration development to production is for the KSM project? Will it look like JV, takeover, royalties, etc.?
It'll be the deal that gives us the best value to our shareholders. We think that will be a joint venture. When you look at KSM, you know, the scarcity of projects of this scale is, it's unbelievable how few big projects that are out there. Our goal in a joint venture at KSM is to keep, you know, a minority interest, but as big as a minority interest as we can, while minimizing our capital contribution. If you look at KSM today, under the mine plan we're moving forward, we're looking at a project that should generate, you know, at today's metal prices, $2 billion of free cash flow a year, right from day one. If we can keep 40% of this project, plus or minus, the value that flows back to our shareholders is immense. Now, we also recognize, you know, the risk being and the challenge being is that there's very few companies in the mining space that have the capital or the technical wherewithal to build a mine the size of KSM. We are focusing on those 7 or 8 companies that can do it, and we continue to try and de-risk the asset to make it more attractive. Completing a substantial start removes a significant risk for any partnership, and getting power in there earlier also helps in terms of construction activities. So the joint venture is the way we want to go, keeping a meaningful interest in the project, with hopefully whatever interest we do keep coming back to us in the form of physical gold, that we can find a way to dividend out to our shareholders.
And then second, and another question here, I'm just going to give you the end of that. Listen, it's very difficult for you to comment on your stock price, but one of the comments was, why is the stock price seem to be trading in such a tight range for so long?
Well, I don't think Seabridge is unique on that. I think it's clear that, yeah, the gold price has done well. Gold stocks have not. And, you know, specific to Seabridge, you know, we've been talking about a joint venture for a number of years. It hasn't happened yet. And I think there's probably some skepticism in the market. Why hasn't it happened? When will it happen? We know that the most important thing that we can do to drive value in our share price and our market is a joint venture. But from our perspective, time is on our side, especially now with this funding. A deal will happen when we get the right partner in with the right terms. Terms are far more important than timing to us, but I believe that when that does happen, we will see a significant unlocking of value represented by our share price.